Hey everyone, welcome back. Ready for another deep dive?
Definitely.
So it's this English learning podcast called Daily Money Briefing.
Huh. Interesting. Okay.
It's actually pretty cool. You get the
Yeah.
financial news and kind of a language lesson all in one.
Oh, I like that. Sort of killing two birds with one stone.
Exactly.
So today we're diving into some recent financial briefings, basically pulling out the key stuff you actually need to know. Our mission really is just clarity.
hmm
Yeah.
And we've looked through these briefings, and three main things really jumped out, both globally and, closer to home here in Korea.
Okay, so what are these three areas we're focusing on today?
Well, first up, we've got the international gold price. It's hit a record high, worth talking about.
A record high. Okay, definitely need to look at that. What else?
Then we'll shift to Seoul real estate. Specifically, this growing gap, this price difference between apartments in, say, Gangnam and other areas.
Ah, okay. That's always an interesting topic. And the third?
And finally, the stock market. There's been some big moves with foreign investors selling off, but also some specific stocks doing surprisingly well. So kind of a mixed picture.
Got it.
Let's start with that gold story. It's been making headlines.
Right. So the number I saw was $3,222.76 per ounce. International price. That's an all-time high, isn't it?
It is a really significant milestone.
So what's behind it? What's pushing it up so high?
Well, the briefings we looked at point to mainly two things. First is the U.S. dollar getting weaker.
Okay. How does that affect gold?
You see, gold is usually priced in dollars. So when the dollar weakens, it becomes, relatively speaking, cheaper for people holding other currencies to buy gold. That tends to boost demand.
Right. Basic economics there. Okay. What's the second factor?
The other big one mentioned is uncertainty, specifically around U.S. tax policies. It seems like that kind of vagueness, not knowing what might happen with taxes,
Yeah.
it makes investors a bit edgy.
And when investors get edgy, they look for safety.
Exactly. They start looking for, safer places to put their money, safe haven assets, and gold. Well, it's a classic example of that.
The old port in a storm. We hear that a lot about gold. Why is it seen as so reliable, especially, in the bigger picture of the global economy?
Well, it's really about its history, isn't it? Gold's been seen as a store of value for, well, centuries. Unlike regular currencies, which governments can print more of and which are affected by inflation,
Right.
gold has sort of historically held its purchasing power better over the really long term. So when there are jitters about the global economy, maybe inflation worries, geopolitical tensions, or like now, questions about big economies like the U.S., people often turn to gold. It's a way to try and preserve capital, basically, reduce risk.
That makes sense. So with this international price hitting a record, what does that mean for us here in Korea?
Yeah, the key thing there is that domestic gold prices in Korea usually follow the international trend pretty closely. So you'd expect to see more interest in gold as an investment here, too. People might be thinking it's a good hedge.
Okay, could be something to watch. But hang on, when something shoots up this fast, shouldn't we be a little cautious? I think there was a warning note about that.
Yes, absolutely. That's a really crucial point. After such a sharp run-up, you always have to consider the possibility of a pullback, a correction.
So don't just jump in thinking it'll go up forever.
Precisely. What goes up very quickly can sometimes come down just as fast. So, yeah, while gold looks attractive based on recent performance, it's really important to be aware of that potential volatility. Don't make decisions just based on the recent hype, perhaps.
Good advice. Okay, let's pivot now. Seoul real estate. You mentioned a widening gap.
That's right. So even though the overall property market has been a bit sluggish lately, maybe cooling off,
Yeah, we've heard about that.
the difference in price between the so-called Gangnam 3 area, that's Gangnam-gu, Seocho-gu, Songpa-gu, and the rest of Seoul, has actually been getting bigger.
Really? So the expensive areas are getting even more expensive compared to the others.
Essentially, yes. The gap is widening. We actually have some numbers on this from Worrybank's Asset Management Consulting Center.
Okay, let's hear it.
They looked at the average apartment price per 3.3 square meters. And the difference in that average price between Gangnam 3 and other areas, well, in 2022, the gap was 31.78 million won.
Okay.
In 2023, it grew to 33.09 million won.
Uh-huh.
And by March of this year, 2024, that gap reached 33.72 million won.
Wow. So the gap itself keeps increasing. That's quite telling.
It really is. And just to put those numbers in context,
Yeah.
as of March 2024, the average price in Gangnam 3 was 66.09 million won.
66 million.
Whereas in the other parts of Seoul, the average was 32.37 million won.
Less than half. That's a huge disparity.
It is. That difference, that 33.72 million won gap, has widened by nearly 2 million won, 1.94 million won, to be precise, in just those 2 years.
So what's the main takeaway here? If someone's watching the market, what does this divergence mean?
It shows that even when the broader market slows down, the demand, the perceived value for those prime Gangnam locations isn't just holding up, it's actually pulling further away from the rest of the city.
That could have some knock-on effects, couldn't it, for like investment strategies or even just understanding wealth in the city?
Absolutely. It raises questions about, future trends. Could this growing divide lead to more economic or maybe even social separation within Seoul down the line? It's definitely something to think about.
Okay, let's move to our third topic. The stock market. Sounds like foreign investors have been busy.
Yes, quite busy, but perhaps not in the way some might hope. The headline figure is that foreign investors were net sellers in April. They sold off about 9 trillion won worth of Korean stocks.
9 trillion won. That's a lot of money heading out. Why the big sell-off?
Well, the usual suspects, really. Things like changes in global interest rates. If rates go up elsewhere, maybe emerging markets like Korea look a bit less attractive for a time.
Okay, makes sense. What else?
Exchange rate shifts, too. If the won weakens against their home currency, it eats into their returns when they convert back. That can trigger selling.
Right.
And also, the timing of the U.S. corporate earnings season was mentioned. Sometimes investors shift focus, maybe reallocate capital back to the U.S. market around that time.
But interestingly, it wasn't like a total exodus from all stocks, right?
Exactly, and that's a really crucial detail. While the overall trend was selling, foreigners were still buying select stocks. They were being picky.
So it pays to look beneath the surface number.
Definitely. It shows you can't just look at the headline foreigners are selling and assume everything is going down. Individual company performance still matters hugely.
And we actually have examples of that, don't we? Stocks that did well despite the outflow.
We do. HD Hunting Marine Engine, for instance, its stock price jumped 21.51% in just the past week. Hit a 52-week high, actually.
Wow, 21% in a week when foreigners are selling overall. That's impressive.
It is. And another one mentioned was Peptron. Its price apparently went from around 100,000 won up to the 160,000 won range earlier in April.
So these examples really show that selective buying in action.
Precisely. It wasn't across-the-board selling. Foreign investors were still putting money into specific companies that presumably they saw strong potential in, maybe due to good news or performance.
So for listeners who are maybe active in the market, what's the practical tip here?
Yeah, the main point was basically this. Even if the overall market seems shaky, or if there are big outflows like this 9 trillion won figure, there can still be opportunities in individual stocks.
So don't panic based on the big picture alone.
Right. Focus on the companies themselves. Are they reporting strong earnings? Is there positive news, good growth prospects? Those kinds of stocks can still do well. So paying close attention to that company-specific news flow and the earnings announcements becomes really important.
Very practical advice. And hopefully we've helped you, our listener, make a bit more sense of these key financial stories without feeling, buried in information.
That's the goal, just pulling out the core ideas, the main drivers, to give you those useful insights.